Donald Trump's ventures into the crypto space are not without controversy. It is true that the regulation is becoming more and more crypto friendly. That's good. But on the other hand, the tokens that have been issued by the Trump family, they haven't performed that well so far. We've all seen the disastrous launch of the Trump meme coin. It shot up very quickly to then subsequently quite consistently go down. Now we've got WLFI, World Liberty Financial, and that as well launched quite high, tended to go down, but now is stabilizing somewhat. Is this potentially a buying opportunity? Let's have a look at the on-chain data, the data most people are not considering. So World Liberty Financial launched with a lot of tokens, 24.6 billion, pushing up the market cap into the billions. And still, there's more than a potential 4x token dilution. The maximum supply of WLFI is 100 billion. And so initially, we saw the token crash by 41%. Now, we seem to be trading in somewhat of a range. World Liberty Financial is a decentralized finance protocol and it's the issuer of a stablecoin, the USD1 stablecoin. The majority of that stablecoin is on the Binance Smart Chain. What's interesting though is that the leading borrowing and lending platform, Aave, has a lower market cap. And so we've got Aave, we've got Athena, we've got Sky, we've got Curve. All of them are stablecoin issuers and all of them are way smaller in market cap. So is this high market cap of World Liberty Financial actually justified? And how much more upside is there really? As said, World Liberty Financial has the potential to more than 4x in supply now. Aave, for comparison, has already seen the majority of its token dilution. Unfortunately, there's a lot of trash information in the crypto space. People just drawing random lines on charts and then publish news articles based on that. This is not how we can get an edge in the market. Some news articles seem to not even been written by humans. It seems to just be generated by AI with a few screenshots of coin market cap. But actually, when we dive a bit deeper, there are news that are noteworthy. Have a look at the governance proposal website of World Liberty Financial. There has been a proposal recently that 100% of the treasury liquidity fees should be used for buybacks and for burns. Now, what are those liquidity fees? It's the fees that get generated when we buy and sell the token. So we don't get 100% when we swap, say, from Solana into WLFI. What we're getting is slightly less because there's a fee for the decentralized exchange that goes partially to the exchange itself and partially to the liquidity pool providers. So the people that actually provide the capital for the decentralized exchange to function. Now, the vast majority was for that proposal, 99.84%. And sometimes, not very often, but sometimes those buybacks can work. The recent example is Pump.Fun. Pump.Fun uses all of its revenue now to purchase back the Pump token. And the reason for the initiation of that buyback program was very similar to what we have seen with World Liberty Financial. The initial launch saw a massive dump, but then with that buyback program, we saw the Pump token getting to new all-time highs in the price. So a well-designed buyback program can work. So in the case of Pump.Fun, we saw 6 billion worth of trading volume in the last 24 hours. The entire Solana blockchain has only 8.4 billion. So the vast majority of trading volume on Solana now runs through Pump.Swap. The total value locked on Pump.Swap is growing and so is the trading revenue. And this of course then helps the buyback program and this of course then helps the Pump token. Are we going to see something similar for World Liberty Financial after this governance proposal? We're going to look at this in a second, but by the way, I publish videos on World Liberty Financial regularly on this channel, so feel free to subscribe over here if you're getting some value out of this video. Now here's the potential difference for the WLFI buyback program. For a program like this to work, we need to see a lot of trading volume. Now, on the very first day, we saw massive trading volume, but since then, this rather tends to decline over time. Now, the issue is, of course, that we don't have that much sample size yet. We don't know how this develops long term. We do have more sample size for the Trump meme coin. And here again, we saw massive trading volume at the beginning and then this subsequently fizzled out. Why did it fizzle out? Because the general attention around the token went down. But also what tends to happen over time is that those larger tokens get acquired by the market makers. And then more and more trading volume actually happens on the centralized exchanges, both on the spot market, but also on the perpetual futures market. Let's not forget the perpetual futures market. It was actually quite big even before the launch of spot trading for WLFI. In the last 24 hours, we saw only 48 million worth of trading volume on HTX. And just have a look at this. All of those major trading pools are on centralized exchanges, not on decentralized exchanges. And again, it was only 48 million on HTX. Now compare this with the perpetual futures market. Here we had 453 million worth of trading volume. So almost 10x that on Binance. So really the price discovery now happens on the perps. And most people that bet on the price with leverage on the perpetual futures are actually currently betting on rising prices. There was a bit of pessimism, as in more shorts than longs around 10 days ago, but for the last 10 days the funding rate tended to be positive, so the longs had to pay the shorts to bet on rising prices. The market has clearly slowed down, as in the trading volume also on the perpetual futures is coming down. And so with that there's also less liquidation fees, which is not great for the market makers. So there might be a bit more volatility coming up soon. But the one metric that I find interesting that we do not see for other tokens is that the open interest, so the amounts of bets on the price on WLFI, tend to stay at an elevated level. Usually perpetual futures are just used for short-term trading. So we've got those two distinct markets, right? We've got the spot market where people buy in order to just hold it for the long term. Buying and selling tends to be rather expensive on the spot market, but holding it over the long term is for free. But for the perpetual futures market, buying and selling is very cheap because the spreads are very, very narrow and because we can also bet with leverage on the price. But holding the token very long term is expensive because we've got the funding fees for perpetual futures, especially if we bet on long, if you bet on rising prices. Using perpetual futures for the long term is expensive. And so that's why the situation is so surprising. We normally do not see long-term positions getting opened on the perpetual futures. But this seems to be exactly what's currently happening with WLFI. And I do not have an explanation for that. If you do, feel free, of course, to comment this down below. Maybe we can discuss this in the next follow-up video of WLFI. But usually, if the price isn't really that volatile anymore, if the trading volume is coming down, if the number of liquidations is coming down, then usually the open interest comes down with it, which then in turn would also depress the price. But that's currently not what we see with World Liberty Financial. People continue to stay invested even on the perpetual futures market. And usually long-term holding happens on spot, not on the perps. And again, the majority of people that currently bet on the token are betting on rising prices. So there's a bit of a risk that we could see a deleveraging and thus WLFI coming down. We have to see a new driver that could push up the price. The buyback program will not cut it. That's pretty clear. I expect the next driver to be a product launch. There are some announced products like the app and like the borrowing and lending platform, like the dedicated exchange, and that could of course push up the price quite a bit. But without any news, I'd be very surprised to see the price continue to appreciate. We need to see some kind of driver, and again, the current tokenomics don't necessarily warrant that the price will now suddenly outperform Solana or Ethereum or Bitcoin or any other major cryptocurrency. Now there is somewhat of an argument to be made that altcoin season might be imminent. And so that's based on the others dominance chart. It shows how much of all of crypto in percent is currently in the altcoins that are not in the top 10. And this seems to bottom out at very similar levels, and it might have just bottomed recently. In the past, when we were at similar levels, the altcoins outperformed the rest of crypto by more than 300%. So I understand this argument, but there's a bit of a problem with the argument because the other dominance measures the market cap, but market cap is a very different thing to prices. There's a dedicated website called Tokenomics AI that does nothing but measure the token inflation of various altcoins. So let's have a look at Aptos, for example, here at number 1. This is the Aptos price relative to the altcoin market cap. Since March of 2023, this went down by 88%. And the reason is an ever-expanding token supply. As there's more and more tokens hitting the market and supply is higher than demand, then of course the price has to go down, at least relatively speaking. This is the Aptos market cap chart over time. It's at very similar levels compared to February of 2023 at roughly 3 billion, so barely a change. But in February of 2023, the Aptos price was at $18. And now it's at $4.39. So this is how much impact token inflation actually has. The others dominance does not look at prices. It only looks at market caps. But we do not get market cap returns. We get price returns. Market caps can be unchanged. Prices won't be unchanged if the supply just keeps on increasing. Now, how much of a problem is this really in the grand scheme of things? Is this just a few select altcoins, or do we see this on a broader scale? The answer is somewhat depressing. We unfortunately do see this on a broader scale. So each week we see roughly 1 billion worth of token unlocks. If we do not see at least 1 billion of additional demand coming into the altcoin market every single week, then the prices have to come down. The others dominance might be unchanged, but the price of individual altcoins definitely do get negatively impacted. Aptos is currently the 42nd largest cryptocurrency. It's just an example. Let's have a look at the top 100 cryptocurrencies. In the last year, Bitcoin went up by almost 100%. We've got 26 out of 100 altcoins that did better than Bitcoin. 73 altcoins did worse than BTC. And so here's what I personally do. I'm simply just betting on bad altcoins to continue to do worse. So we can just flip this chart around. This is the Bitcoin price relative to the Aptos price. At the bottom, we've got the others dominance again. So the others dominance did not change at all in the last 2 years, right? It went flat while Bitcoin's price relative to the Aptos price appreciated by 400%. So this is really where I believe the alpha in crypto is. It's the market inefficiency of highly inflating altcoins. I'm following this strategy already for roughly 4 years. So I'm betting on poorly performing altcoins. I'm betting on them to go down further, while I'm betting on rising Bitcoin, Ethereum, and Solana. And because of that, I outperformed just dollar cost averaging into Bitcoin. Dollar cost averaging into Bitcoin is shown here as this light gray line. But I got the performance that's shown in the black line. So there is a way to beat the market without trying to find the few winners. We can simply bet on the market structure, on the constantly increasing token supply of many altcoins. It's maybe not as straightforward as just buying a single token. Some things have to be learned, but that's why I made dedicated videos on the topic. I try to make this as simple as possible, so there's really only 2 videos that have to get watched. The first video is using perpetual futures to bet on relative valuations. The second video is risk management with relative valuation bets. Once you've watched this 1 hour of content, you know exactly what to do to get this kind of performance, to set up positions like this. After you've watched those 2 videos and you've joined the community, I will send you my favorite trade that looks very similar to Bitcoin relative to Aptos. If with that trade you do not make money after 1 month of holding the position, then I will refund the membership fee to you. So those $125 are actually not what you're risking. If you don't make money with this favorite trade, you just get that money back. Just message me and I will refund you, no questions asked. Of course, besides this favorite trade, I will also share every single trade that I execute in real time as well. You can simply just copy trade me. A link to Premium will pop up directly on the screen over here. Just click on that. It will lead you to the website. If it's your very first time here, feel free to subscribe as well. I publish videos on YouTube regularly. See you next time on YouTube or see you in Premium. Cheers.